in the demand for these products. You see, I can say, if I speak about the context of Tanzania, basically, I think the economy of Tanzania is carried by SMEs. Actually,
Yes.
I think almost 93% is financed by banks and other institutions. So these institutions like MFIs who saw this opportunity decided to come into play and finance these businesses. So that is what I can say. There has been the operations that is happening with these MFIs that operate with the SMEs is that you find how they operate. Some of them come because they want profit, I'm just after profit. But what if we look at a different angle? What if we can actually sustain the business by making sure that we make these businesses, we uplift the businesses, and we build loyalty to these customers. So that's what I was trying to say. So bottlenecks, basically,
it's a very great explanation, and I think I'll go back to that later. And so let me give me your introduction. What is the company doing, and how long have you been in the market?
Well, my name is Alfred Mwasambo. I've been working in micro lending business for, let's say, for about 4 years now. I started in one of the companies that has been operating in Tanzania for about 5 years, called Oya Microcredit. I worked there for around 3 years, and then for around 2.5 years. Then I moved to another company that is called Hope Microcredit. I worked there also for about a year, and then I came now to this current company. I'm working as an operations head, and I've been working here for the past 10 months. So that's about almost 3.5 years been working in this industry. So for all this time that I've been working, I've been trying to study the patterns of how these companies operate. And the current company that I'm working, I've been working for the past like 10 months, and I've realized that there is some uniformity on how this company operates. Like there is some commonality. And so I was asking myself these questions, like, what if you try to think outside the normal norm, how they operate? So that is a brief about my introduction.
Okay. Thank you so much. So at least you are the right person to be having this conversation, because you've been in the market for 10 years. No, for 5 years. So you have seen most of the people that research cannot see, or just a Google search cannot see. I think you are the very you are the perfect guy for this conversation. But okay, so let's go to a typical daily procedure, okay? How do you typically build a good picture on an SME before giving them your product? I want to understand, how do you create the picture, because they're not registered. You're giving unsecured loans most of the times, and they're not digitally integrated. So a typical mama shop, genge shop. So how do you build a picture of that until you say, okay, we're satisfied enough to give you a loan? So I want to see how you build that picture.
Okay, thank you. First of all, you cannot be 100% for sure. For this client is the real client, and one of the
a real client. What do you mean?
Client? Because some of these people, some of these clients, I can say them, they fake these businesses, because the loans are easily available, or there's availability of these loans is because we have a lot of companies actually. That's what, to use the same model. So some of them, they fake business. Their businesses are not actually theirs, or the businesses. They are not qualified to get these loans. It takes someone who can understand the dynamics of how the businesses operate, or someone who can do some very strict due diligence to come up with a conclusion that this is a real customer. That is another story. I wanted to say, how do we come up to actually give the loans? So the process is not that simple. First of all, you need to do some awareness. Of course, you need to do some marketing. You need to advertise yourself. You need to put yourself out there in the market. But then after now, you go to the market. You have to make sure that you talk to these clients. First of all, you talk to the people. You talk to the neighbors. You talk to the fellow business people, for you to come up with a conclusion. And this process is by the way, the process that takes for you to complete an assessment is it's like an hour. You see, it's a very short time that you have to do all this. So it's a very intensive process that needs a lot of training. Because like for me, I can say if I come to a customer, that say it's a prospect customer.
Okay, so
if I
so,
talk
so
to
okay,
them,
so for example, let's take a picture. I come there, okay, what do you need to know about me that will give you confidence that okay, I can get a certain type of loan?
first of all, you need to have a business. I need to know that the business is yours, and you need to know about your business. So I will ask you a few questions. I will do some background checks. But talking to you, just conversing with you, in 2 or 3 minutes, I'll get to understand if the business is yours or not. So there are some cues that I need to know. There's
Okay.
a lot of things that maybe you wouldn't know. I will ask you questions that probably you would answer, and if you answer wrong, then I'll know that this guy is a legit or is just a fraud. So that is a training that needs to be done. And unfortunately, most of the companies, they do not do these trainings to the field officers. That's why you find there is a lot of default rates, because they give loans to people who do not qualify to get these loans because they lack the basic knowledge of how to identify prospect customers. Yes.
Okay. I don't know if it's confidential or not. Can you share one of the things?
One of the things is I can say we do what we call confidence. I can say confidence test. You see, if I come to you, this is your business. I'm expecting you to be so familiar with your business. So first of all, how do you respond? How confident are you? How collected are you with your business? So you see, it's about psychology. If I come to your home, I expect you to know where probably your free refrigerator is. I know you're supposed to know where certain things are. So if I ask you a question, it's just an abrupt question, you'll not expect it. But if I ask you and you start staggering, I'll know, okay, this is not your business. I might also ask the prices of very simple things. See, so how much does this cost? If you're familiar with your business, you won't start to, look around. You have to be as swift and as confident as possible. So that is just a nutshell of what we do to identify if a client is right or not. So it's a lot of assessment.
Okay. So you told me it's the angle you told me is you're assessing the person, not the business. Okay.
I'm assessing the person.
Okay. Yeah. Is there any operation information about the business that you're really into? Maybe mobile money, if they are into circles, or if they are into any community group, any sort of, because I'm really interested on the business side. What in the business do you really understand? What's indicators in the business do you, the sales, the revenue, what exactly do you?
In the business, what we do, first we assess cash flows. We need to know if the business is transacting, if the business is moving. If you're talking about, let's say, they're into circles or in the community stuffs, yes, of course, we do that. We assess businesses also. But the challenge is that you can assess the business and then the business is okay, but the person who claims to own the business is not okay.
Okay, yeah.
First, we assess the person and then the business. Okay. You understand? So these two have to go one in one. Yeah.
Okay. So in your experience, most businesses don't have. Okay, there's a difference between the business and the person, and according to you, most business they do well, and the person might not be that trustworthy.
Yeah, sure.
Okay, so do you give loans to exactly business, or do you give business loans like capital, or personal loans, like I can come to get loans from you, or it's just strictly business?
To business, you have to give loans to business. Yeah.
To business. Okay. That's
yeah.
Okay, but I really want to understand, what is the ticket size of the product that you're giving? How much is the maximum? How much is the minimum? And for how long do you take it?
So that one, I will say it depends with the company, but on average, these loans have to be a short-term loans. They don't have to be a long-term, because remember, these people are not registered. Their business circulate every day. And if you give them a very long time to pay the loan, they will feel like it's a load, it's a heavy load, because they have a lot to do with their little money that they're earning. So you have to compress that time for them to be able to pay and continue doing the business. The duration is normally around 3 to 6 months. That is normally the duration of the loan, but they have to pay weekly installments, you see. So the ticket size normally ranges. It depends with the company how they've structured their system, but normally it's around from Tanzanian cash, Tanzanian shilling, it's like 200K up to, let's say, 10 million. This is Tanzanian shilling.
Okay, with the interest of...
So the interest now, the interest is usually big because of the high operation cost, because the operating cost is normally big. So the interest have to be higher for them, for it to cover the OPEX. So the interest normally ranges around 10 to 12% per month.
Okay, so 10 to percent per month. Okay.
Yep.
So let's go to the challenge part. I
Okay.
really want to understand what is the challenge of your operation side that makes you have a higher interest rate, and what also are the challenges from the business that you're serving that can be improved and start.
Okay, so for the side of...
Because honestly, to be honest, yes, I've been sitting with a lot of people like you who are actually on the ground. People like you are not talking, just people who are building policies and all that. So I really need to understand you because you're the soldier in the ground.
Okay, sure. So the challenges, first of all, you asked the challenges that I face maybe as operating for the interest rates to be that high.
Yes.
You see, how this business operates is that you have to deploy people to the market, and these people have to operate from the market. So the operating cost is normally high because there's also the risk of high NPL. So because you give loans that are mostly unsecured, so there is high risk of people defaulting these loans. So for you to cover yourself, you need to put the interest rates at a level where even in that case happens, you still be maintaining your liquidity. So that's one of the challenges that we face because of the unsecurity, the lack of security or lack of formal security of these loans. The interest rate have to be high, and also if you include the operation cost, also the interest rate has to be high.
So operation costs, what do you actually mean?
I mean
the amount of people we're going to...
No, the whole process, like from the acquisition of the new clients up to the disbursement of these loans. It's a very intense capital process, because remember, it's not like banks where there is everything is on paper, everything is solid, everything is so formal and right. These ones you have to now to believe that whatever I'm doing, it will bring back a profit. But then you have to secure yourself somehow for you, in case it goes sideways, I'm still be able to maintain my business. So the operating cost starts from client acquisition of clients, or the client onboarding, up to the process of full loan recovery. Because sometimes now you have to employ a recovery officer or external recovery officer for them to go and collect these loans. And now this comes with an extra cost. Yeah.
Yes. Okay. So it's high operations caused by unsecured loans.
Yeah.
Okay. And on the business side, because if you are you say that there needs to be a development in this sector.
Absolutely.
For you to service them more. I mean, you should come, because most of them are informal, small. The small business, the low ticket size. You should come with an angle of trying to help them in order to service them. So, what are the challenges that you have seen that they're facing that it needs to be tackled?
I can say it's, let's say, there is a very weak financial infrastructure. You see, if you are operating in this business, you need also capital, and you need very big capital. You need very huge amount of capital, because now there is a lot of demand of these loans, because we have a lot of people that need them. So you need capital. So there is weak infrastructure, because for you to get now loan from a bank, if you are running this business, now the banks need to ask a lot of questions. They need to be 100% sure. You need to start your business first. I can say that lack of clear developed collateral systems. You see, if we are giving unsecured loans, but if the amount of the loans go higher, if you start now going higher, you need to have a stable collateral system. Like, you can't give, let's say, 10 million shillings, Tanzanian shillings, without some clear collateral. You understand. But then now, if you put some collateral, now the customers start pulling back.
Yes.
That's also a problem.
I mean,
so we need some clear collateral system that at least will be favoring the customers, and also will be fine for us to use it, because it will also put some security on this side.
Okay. Also, okay, because I don't know. I'll share a book that I was recently reading. I don't know if I can share with. I think I can share with you. I don't know if I can share with you now, but it's called How to Finance Africa. So it really talked about the issue of collateral, and I'm very interested in that part, because everything is because they're unsecured, because they cannot give a collateral to back what they do.
Yeah.
But in reality, we cannot sit and wait for collateral, because they really do not have.
Yes.
And so we really need really need collaterals. So for example, instead of having a fixed collateral, maybe house or something or land, we can try to have a movable collateral.
Absolutely, that's
Okay,
perfect.
there's a very strategic way to go about it, and I want to hear more from you. And also is okay. So I think we really need to define a collateral is. A collateral is what I really understand is something that can back what you're loaning for, and can really reduce the risk of default. But also I think we can, so there's a concept also of mobile money. Okay, so I don't know. It's very unclear. It's not really clear, but I think we can try to de-risk and create a sort of a form of collateral from different angles. For example, if you are affiliated for a SACCOS, that form of information can be as a form of collateral, because we really need to, how can you reduce risk? So if you are belonging to a SACCOS, Kikoba or something, we can really capture that. And also if you really belong maybe to a community of group, for example, if you're giving out a loan to a boda, yes, and one boda comes that he belongs into a group of community boda, that can really be a form of, a form of collateral. So I think there is, for my case and what I've been studying recently, a collateral we really need to change our mind from a collateral being a certain kind of thing into a concept or a system that can, maybe a community, Kikoba, a mobile money stuff, because we cannot really demand for a solid collateral like land, house to these people, because most of the people are not businesses. I don't really business or entrepreneurs. They really cannot have any jobs or cannot do anything. That's why they got to business. So what do you think about that? And how have you doubled on that? And how do you see it in the market playing?
That is one of the best ideas that I've been reminiscing for the past few years, because now you see, like I said at first, like what these businesses are after. Some of them, they're after profit, so they just want
business, meaning the lending businesses, okay,
the lending
microfinance
business, of course, the microfinance. Yeah, what they're after profit. So if they put money out there, they expect we're gonna get profit after all. But then, if you're talking about this like collateral that you just defined, it's very important, and I think it will help to build a long-lasting business in the long run. I will take an example of there's a microfinance institution called ASA. If you've known it, is one of the institutions that is, I think it's one of the best, of the biggest actually in the country. You see how they started. They started like giving loans using this collateral that you're saying. They use vikundi. You see, what we call vikundi is like for us to give you a loan, you have to come with a group of people that will actually be like your collateral. So they started with this idea, and then now they ventured into the personal business loans. But I think it's one of the best collateral that we can use as business to these SMEs, because most of them are not registered. Like what you've just said for boda, for bajaji and all, if they come as a group and actually that group is registered, we can be sure that if we give someone from that group a loan and they don't pay, we are sure on where to go and find them.
Yes.
So it's a very good SACCOS. Same applies to SACCOS, and I think these businesses need to really look at that angle, at collateral. That collateral is not, it has to be, it doesn't have to be a fixed a fixed collateral, you know?
Yes.
Yeah. Like give me your logbook for a car,
Yes.
then I'm giving you a loan.
Yes.
Some of them, they don't have cars, you know? Give me a title deed for a land. They don't have that. They are trying to survive using these businesses. But if now you bring the idea of this community thing, you have to come 5 of you, and then you have to register this circle or this group. I can give you a loan.
Because I've been trying to think, because in a natural way, as a typical African community, we live in communities, okay? And for example, a Boda Boda community has its leadership. Everybody knows where he or she lives, and
Yeah.
how much, not how much they earn, but at least they know they have a sort of leadership. So they have a kundi and a leader, and they know, okay, huyu anapatikana wapi, huyu anapatikana wapi, huyu anapatikana wapi. So I think we can really tap into that and find a way to link these sources. So yeah, I think there's a promising future in that.
Yeah, sure.
Yes,
that's very
okay. And so I've been talking to a guy, and he told me about there's government loans that are offering 10% or lower than 10%. Do you see them as a challenge to you, as a competitor to you?
No, that's not a competition. I don't see it as a challenge, because you see, we have systems that the system that these SMEs work. These microfinances work is a system that is very deep into the people. You see, the access to these government loans actually is not that much. You see, most of the people actually do not have access to these government loans, because they have a lot of the process to acquire this loan is very long, very tiresome, a lot of process. So most of the people do not benefit from these government loans. So a large group of people who do not benefit from these government loans, now they come to us. So actually, it's not a competition.
Okay.
I don't see it as a competition.
Okay. So what are the challenges, or what are other challenges that you are seeing in the space?
There are many challenges. Another one, I think, which is also a challenge, is I think there is a very minimal adaptation of digital payments into these businesses, into these microfinances, especially those ones who offer unsecured loans. And this is because now, if you come if you give a loan to someone, and then you tell them now you have to pay via mobile payment, or you have to pay through digital platforms, some of them do not. They will tell you, no, I cannot do that. You have to come and collect cash. If you want me to repay your loan, you have to come. So there's a way that.
Okay. So sorry. So you're saying if they want to pay back your loan, they need to pay you via mobile money, so you can track at least the transaction. Yes.
The transaction. Because now, if you say that you want to go and do physical collection of this money, now the cost now even goes higher.
Yes.
So I think there is a need to integrate mobile transactions with these microfinances well enough, and it should also be friendly. There is integration that is happening, but it's not that 100%. I can say that most of these people, especially these small business operators, they don't have that enough knowledge about how to do these mobile transactions. You see, some of them don't even phones, but then they're qualified to get these loans. They need these loans. But if you tell them now, you have to pay me in form of a mobile transaction, they'll tell you, no, I'm not going to take that loan. So you see, we lose a large number of people because of lack of this adoption of mobile payments and digital transactions.
Okay, so currently, do you work with people that can pay you back with a online transaction, or any?
Yeah, we are integrated. We do that, but not all the clients.
Okay, no. What I'm saying is not only those clients, but we work with any other clients. So
yes,
we both collect physically and digitally.
Yeah, sure.
Okay, yes. So I think yes, what you said is really a challenge, and also I think there is a need to define these small businesses, because when you say MSMEs, there's a person owning a supermarket is different than a person owning a genge, and is also a different from a person who's a distributor of wholesale distributors. And I think the development and the innovation has been made on those, I can say, middle small businesses. The POS systems, the paying systems, the tracking systems. I've seen people having applications to manage your inventories and stuff. And most of people from the lower end who are really on the ground level, there's little to none innovation that has been done. Okay, so you talked about innovation in the financial system. So what exactly should be done? Because, for example, if I go to a genge, I can say pay me back through via mobile money to track. But he does business in cash, because mtu akija kununua nyanya halipii kwa simu, analipia kwa cash. So that's the challenge. We can because if we're able to track inventories, transaction, how much he sells and how much the expenses, at least it can be a challenge. It can reduce the risk. So how do you think digitization can play a part there?
First of all, I think this is a wide thing, because it's a wide understanding, because now the government has to come in play. First of all, there is a very transaction charges in this country for transactions is very high. There's very high transaction charges, and that is why most of these small businesses do not adopt to pay via mobile money. Because if you go to I've been lucky enough to go to different countries in Africa. Like if you go to Kenya, someone goes to Genge, pays 100 shillings with mobile money. I mean, even the smallest amount of money that you can pay, you buy nyanya, 2 nyanyas, you can pay using mobile money, because the transaction charges are very minimal. Now, if you come here in Tanzania, the transaction charges are pretty high. So if you tell someone owning a genge, you have bought, like, let's say 2 to 3 nyanyas, and then you tell them that I have to pay using mobile money, they will be like, what are you saying? Like,
Yeah.
I can't even withdraw that amount of money.
Yes,
so I think
yes.
there is a need to, this now has to come for the government to try and subsidize these mobile transactions. At least if they reduce the transaction charges, now these SMEs now can come into play, because now the customers will be willing to pay via mobile money, because some of them are saying that, because if they pay using mobile transactions, there has to be transaction charges. Now,
Yes.
if there's no transaction charges, at least they will adopt to that. But if now there's a little transaction charges, I think we can easily adopt these mobile transactions. So this has to come with subsidies. This has to come with policies from the government. I think it's a wider problem that has to be addressed by the government.
So in reality, the digitization of this SMEs is not a 5. It's not a 5 years plan. It's maybe a maximum 10 years.
Maximum 10 years. I think we need to have a change of systems.
Yeah.
It's a big problem, actually.
Okay.
So there's also other problems.
Yes.
Yeah, there's also other problems apart from the digitization of these transactions. Other problem that I've been able to identify facing these businesses, microfinances, is, we can say, there's no clear banking systems. There's no integration with the banking systems for microfinance institutions or fintechs. You see how they operate. Right now, they're trying to do that integration. But you see, if the loan ticket increases, now the banking payments becomes a clear option for that, because the mobile transaction, there is a limit to the transaction. Like, probably you can't transact more than 5 million in a day, probably in a given MNO, a mobile network. Let's say like Tigo. You can't do more than 5 million. So the integration between the banks and these microfinances is important. But currently, it's very weak. There's very weak integration. Actually, for the companies I've been working with, I think only maybe one has been able to do successful integration. And this is because the banks, I think they're trying to put themselves, they're not trying to come into play with this and microfinance institutions, because there's so much process. If you want to integrate your MFI with the bank, there's so much process that you need to undergo. There's a lot of process. And actually, even for the mobile network operators, if you're trying to integrate it, there's a lot of process, and it's very costly actually. So I think they a need for this business, for microfinances, to address this. We look this into another way, where we need to integrate fully our operations with banks, especially our transactions with banks, and also with the other mobile network operators.
Okay, so there's a mismatch between you as an MFI with the mobile operators and the banks. Okay, why do you need the banks and the mobile operators? As capital providers, or why do you need them?
We need them not only as capital providers, but also as transactions, let's say as transaction partners, because we need someone who will be able to transact large transactions for us. We need someone, because the mobile operators now will limit you. Like, unless you go and do some other adjustments with the that's now part of the client. The client has to go and do adjustments. I'll give an example. If we go to, and this is clear. Tigo has limited their transactions up to 5 million. Now, if a client wants to get a loan of 10 million, they have to go to Tigo for them to have their SIM cards adjusted to be able to receive the 10 million. Now that becomes a problem, because the process is quite tiresome, and probably they don't have that time to go. So you might lose that customer because you don't have the bank integrated system for you to disburse the money to their accounts.
To their
You
accounts.
understand what I'm saying?
Okay.
Yeah. So we need to integrate our system in such a way that there will be easier transactions from us to banks to clients. It will be quite easier.
And do you think you really need banks, or do you really need microfinances? No, do you really need mobile money operators?
We might need banks, because I think
No.
there is.
You know what I'm saying, banks, because most of the clienteles don't have bank accounts.
Yeah. Now I'm speaking from those clients who are taking a slightly larger amount of money.
Okay.
Yeah, large amount. Let's say from 5 million onwards. Those ones, because we expect those ones to have accounts. But for the smaller tickets, 200,000, 300,000, this one we can do with micro MNOs, mobile networks. Yeah.
So what's the percentage between people who are using banks and using mobile money from your customer base? What's the percentage that you have?
Most of the, it depends with the size of tickets that you are.
So far, what is the percentage?
So far, most of them are using mobile money. Most of them are using mobile money.
Percentage-wise?
Percentage-wise, let's say 80%.
Okay. Yes. So
80% are using
that's what I'm saying. So you can say, when you say, so most of them are below 5 million.
Yeah, most of them are below 5 million. But now, if you talk about those who are, because if you talk about 5 million and above, you will have few clients, but they take a very huge amount of your portfolio in terms of money.
Okay.
Yeah.
Okay. So you really need those large to service those. Okay. Yes. What are
other problems?
Yeah.
Other problems. I think maybe there is also this other problem that I think the government is trying to address: the problem of lack of clear records of clients by these SMEs. Most of these microfinances, they don't have records of clients. We don't have information about clients and how they did in their previous credit score. You see, because if a client, for example, I'm going to assess a customer, I need to know their record, what they did in the previous loans that they took, because these clients are taking loans everywhere. There is a lot of it from mobile money, from banks, from everywhere, from other companies. So I need to know. I need to have a record. So there is no a way where I can access this information. But recently, I think the government, the BOT, has been trying to create a platform where you can fill the information about clients, so that this information can be available. So if I need to access this information, there is a place where I can go. But still, the process is very lengthy, the process is very tiresome, and sometimes it doesn't work right, because of the dynamics of this customer. This customer, they don't have a formal way of giving their records right. So it's a bit challenging, but I think if it works, it will be very healthy.
But I think, with all sense of fairness, we can be positive about it, but we need to be realistic about it.
Mm-hmm.
And first, as you say, there's no centralized system to get credit information, the credit bureaus. I don't think, and as you say, it has been starting, because an average person can borrow from Tigo. So how do I track that akija kwangu as a fresh new customer? So I think, yes, that's really needs, there's a challenge that needs to be addressed.
Yes.
And yes, what else are you seeing in the market?
On the business side, on the client side?
No, yes, because I really want to understand the dynamics. You as a business, what are you going through? And also, as a client, what can be improved for you to do business well with them?
Sorry? You say?
No, I'm saying, I really need to know the two sides of things. You as a business, what are you currently facing? And also, what do we need to improve to these small businesses that you can service them more? Because if they do more, you have a pretty good check.
Oh yeah, sure. So first of all, we need to have some, physical. There's also the physical infrastructure constraint. You see how we operate. Most cases, because of the large number of clients and the operating cost, trying to minimize operating cost, we have, let's say, lack of physical structures sometimes in different parts of the country or different parts of the region. So you can't have structures like the way banks have branches and all that, but that is very important. So we as business, we need to look at because the structures build also trust to these customers. Some of you go to the market, to the field, and they ask you, where is your office? Now you operate in a different region, but you tell them my office is in another region. So they're like, are you guys serious? Are you legit? Yes. So I think that is also a problem. So if you get to have that physical, if the customers have that physical access to some physical structures to your services, it builds more confidence,
more trust.
Yeah. So
yes, because people are more they can trust, at least if you have an office somewhere that we can actually go instead of 100% online or something. So what regions are you currently working on?
We are in Dar es Salaam, and we are also in Arusha.
Okay. Yes. What else are you seeing?
I think basically there is what we call do you know about what we call data silos? Data silos. There's the financial and non-financial data are not shared across institutions. You see, if I've been working in another institution and I moved from that institution, but I need maybe information about a client that has been in that institution, so I can't access that information, leave alone the central way. But institution like banks,
you as microfinances.
Yes, we as microfinance. Banks, they can share information bank to bank. That one is there. But in these microfinances, I think they think that protecting their information about clients is what is serving them more. But that's not the case, because these customers, they always borrow from one institution to another, one MFI to another. So if there's a way that these microfinances, we can have some information about these clients, which should be open, I think we'll be helping each other.
Okay, so now it's a community thing, because now everybody says, okay, this is my data, and this is my data, this is my data. But if in a long term, if we cannot know who's borrowing from who, if he or she defaults and comes back to us, it will give us a loss. So do you think in the long term, there's more disadvantages than advantages?
Definitely, because now you go to a client, let's say the client has defaulted. So you go there, you meet around 3 or 4 companies and the same client. They also come for the same client who was defaulted. Now
and then
yes, but if we had information prior, I think it would have saved us so much time, because now this client who had maybe more than 5 loans, I don't think we have to give this client another loan, because definitely that's not a good client.
It's not a good client. Okay. So what and thank you for these insights, because as I say, you cannot get this from a research paper or anything, or maybe you should write a research paper. Yes. So we have groups of financial systems. We have groups of banks. We have groups of mobile money, and we have groups of microfinances. And microfinances are the only who don't have a central information from to to share amongst each other.
Yeah.
Okay, so let's go back to also, so in the past few years, a lot of microfinances have been closed in Tanzania. What do you think is what was the challenges, and what led to that?
Yeah, I think first of all is about the
And how many and how many are they right now?
microfinances. I know
Yes.
about 30 or something. I know about 30 microfinances, yeah, but I think there are a lot more.
More than that. Okay.
Yeah.
Yes. So yes.
Yeah, so I think one of the reasons why some microfinances have been closed for the past few years is the normal challenge. The operating cost is very high. Maintaining that operations, needs a lot of capital. And most of these microfinances, as I said earlier, the banks do not really give you loan that easy. You as a microfinance, especially if you're giving out unsecured loans, the banks has to ask a lot of questions. Are you sure? So having access for that operation to continue, needs a lot of capital. So most of them, they do not have that capital, so they do not sustain themselves in the long run. Another thing is also the high default rate. The high default rate is causing a higher NPL. You see, because if your loans are not being recovered well, there is no business of you continuing giving out another loans. And this is because of the lack of, let's say, proper recovery systems. So you end up having a very large number of clients who do not pay back the loans, and also poor credit mechanism. You see, if you do not approve well, if your loans are not assessed and approved well, you end up giving out bad loans, or loans that cannot be repaid well. So yes, I think that's also a gap.
Okay, so yes, so we are trying to end, because I don't want to take much of your time.
Okay.
But I think we can continue this another day. But
Sure.
I really want to understand on a very specific thing. If you in 1 minute, give me what causes high cost of operations. What is really about the operation cost?
First of all, is the process of identifying and disbursing a loan to a client that is not registered.
Okay.
You see?
Okay.
So because now you have to be sure about this client, so you have to do some research, a little bit of research, background checks.
Okay.
This consumes time. You need to invest in people who are very smart, people who can do this. You need to also movement.
And also infrastructure, yes, because you need to go to them. Okay.
Yeah, you have to go to the clients. Also, the recovery process is also costly, because now if they don't pay, you have to go there. So those are just but few costs that make the operating cost.
Okay, thank you. So lastly, can you give me what's the recovery process like? Or do you hire external institute, or do you do them yourself? How do you do that?
No, you have to do it yourself, because you know the client. Client, and also so it's also important for you to go and do it, because you learn a few things. You can also get another customers there if you go to the process. But then if it gets to an extent where now you are saying, I'm making a loss, I'm using a lot of time and money for recovery, whereby I could use this time and money to do more disbursements, now you have to employ an external person. Which
Mohammed Yunus is the founder of the microfinance concept, and I really think he's a very interesting guy. And you can go and do some research on him and see how he theorizes his concept. Yeah, so because he's in the direct industry that you're working in. Yes. So lastly, is there any last words that you want to say?
First of all, I have to thank you for having me on this platform. I like sharing. I like sharing my ideas with the world. Actually, have most of my lessons in TikTok. I've been posting there. So people can check out me. It's called Muska. So you can check me out. I have lessons I teach because I love to share out knowledge about what I know. But what I can say is that there is a very, very large market in this business. There is a lot of people that need to be served. There is a lot of demand for these loans. That's why we have a lot of companies that are coming in every day. But then we need to have a system that will accommodate every person, and a system that will also be favorable to the business, so that we can maintain clients in the long run, and also operate well as a microfinance system.
Okay, so is there a lot of customers than the actual businesses or the inverse? Because you say you need to have a system to accommodate them.
Yeah,
Do you think there's
we need, even if these businesses or microfinances operate to customers that are informal customers, but still there are some who are not reached. We still have some that can, the tickets are limited to a certain number, but we can go deeper into the customer and try to cover those ones who have not been yet covered. So there is demand for these loans. Yeah, that's what I can say.
okay? And to the investors, because it's a very broad market.
Yeah.
And sometimes when you say unsecured loan, some investors pull out the capital because
sure.
in a real sense, it's not a charity work. The money needs to come back.
Business. There has to be
the money needs to come back. What are you saying to them?
I'm saying to them that the money will eventually come back. If you put down your structures well, if you put down your system well, if you get the right people, you do the right trainings, you pick the right markets, the money is definitely going to come back.
Okay, so give me 3 places, yes, that innovations needs to come and a person can start a business to solve that kind of problem. It can be between you guys, it can be between you and the banks, it can be between you and the clientels. 3 places that people can come, and there's a room for innovation to help the whole ecosystem.
First of all is in terms of the recruitment part, how you recruit your people, how you get these, because we have the credit department is very crucial. You need to get the right people, the officers, you need to get the right people. So there's the recruitment part that needs to be looked at, because how it's done, sometimes it's done not really well enough. So the recruitment part is very important. Another thing is also about the collateral part, where we need to look at it, like we said, about the collateral doesn't need to be movable. It doesn't need to be fixed collateral. They need to look at that part. And also another thing is basically, like, what can I say about the nature of these loans, and talk about how we give these loans to the people. Sometimes we try and operate by trying to minimize the costs, but then this one can cost us even more. So let's try to employ digital ways on how to transact these loans. Let's be more digitalized. Let's let the investors try to look at it in a way that we can try and move to an era where transactions can be done freely and easily by digital platforms.
Okay, and also you say there's a room for creating a way of you guys to communicate within the ecosystem. Microfinances between big.
Yeah, sure.
Okay, so thank you so much, man. Thank you for coming in, and you will be seeing me a lot, and I'll be asking you a lot of questions, and you can share my email too, because I'll be sending you some reports, sending you some feedbacks, some things that I really need to understand more.
Okay, thank you for having me, man. Be loud.